And they've learned how to manipulate data. And as a friend of mine says, to a man with a hammer, everything looks like a nail.
What are my best and worst stocks of 2018? That is what we're going to talk about here today, guys. I'm going to show you screenshots of my best stock and unfortunately my worst stock, as well as a stock that makes me so upset I didn't take profits in. We're going to talk about this in depth. This wasn't even my video idea. Yesterday I posted a video on the channel about 10 growth stocks for 2019, and one of the top comments on that video, it spelled my name wrong, very disrespectful by the way, it's Jeremy, says, I think it would be great when at the end of the year you make a video on the stocks you recommended last year and show how well or bad they did and what was the problem there. And that comment got like 46 thumbs up, so I was like, okay, we can go ahead, we'll tackle this today. It's like 2 weeks away from the end of the year, so we'll get into this and I'll show you guys my best stock, my worst stock, what went wrong, what went right, and as well as the stock that makes me so upset. So number one, I just want to be very clear, I never recommend anybody to buy certain stocks. I never tell you guys, oh man, I'm buying this stock, you got to go buy this stock or something like that. I never do anything like that. I cover the stocks that I own sometimes on the channel, like my 3 stocks I'm buying type videos, or the videos I'm like gonna buy a stock or something like that. But I'm not covering it because I'm telling you guys to go buy it. I'm covering it because I think it's interesting. People love those type of videos and they love learning the process on why I'm buying a stock. It's not like I'm just saying, oh, I bought Alibaba stock, go buy Alibaba stock. It's like, I bought Alibaba stock, here's why I bought Alibaba stock, and I go into detail on that. So it really frustrates me when I see comments like, oh, you recommended this stock, or like, I don't recommend anybody to buy any stocks. I share the ones I'm buying. Same thing as Warren Buffett might go on CNBC and talk about why he bought a certain stock. It's just the way it is, okay? It's not I'm recommending, it's just I'm talking about it. Number 2, the class of 2018, all the stocks I've added this year, the jury's still out on them, all right? This has been a year of kind of portfolio change for me. I kind of got out of all the stocks I was in like 2015, 2016, all those positions. I got out of those in early 2018, and I kind of fully built out my portfolios all new this year. So the jury for me personally is still out on all these stocks, because generally when I invest in companies, I'm thinking a minimum of 3 years out. Doesn't mean I'll always hold a stock for 3 years. Things could come up. I could sell a stock because it went up a ton. I could sell a stock because I don't like the management anymore. Something changed there. Who knows? It could be many reasons, but generally I'm holding a stock for a minimum of 3 years when I go in. So when I look at that, for me personally, the jury is still out on all these stocks. 2021 is when I'll start judging them and be like, oh, I did really good in this position, or this was a really good decision, or man, I really messed up, this was a really bad decision. That's when I personally will judge myself. And number 3 is the biggest mistake I didn't take advantage of was shorting or buying puts in Netflix. Back in July, I did a video on the channel and I felt very strongly about it that Netflix stock was massively overvalued. It was like $400+ at the time of doing that video back in July, and I did absolutely nothing about it. And if I'm looking at something that I had a strong conviction in, but I never put a dime toward it, it was that decision. So unfortunately, no money was made there, and I could have made a lot of money, especially if I bought some put options out, 3-6 months into the future. Like I would have, made a ridiculous amount of money on the gains. There probably would have been the thousands of percent. So anyways, it is what it is. So with that being said, let's get into this, guys. I hope you enjoy this. As always, hit a thumbs up. As far as my best position in 2018, it would be Tesla stock. So this is just one of the accounts we hold Tesla shares in. This is the account we hold the most Tesla shares in of my accounts. We hold 50 shares in this particular account, and we're up nearly 30% on that position, 29% total gain so far in Tesla shares. Cost basis in this account is $283.22. And so Tesla, obviously this has just been a banner year for them, growth like crazy. I got in it several times. We'll look at some more screenshots here in just a second. I got in it a few times this year at just at perfect times. It was such a volatile stock that if you're a long-term investor, you got to pick up some shares for very, very, very cheap in this company. These aren't the only shares I've traded this year. I didn't want to trade necessarily Tesla shares, but there was a whole situation came out about Elon Musk fighting the SEC. They're going private at 420 and whatnot. So I've already booked great profits in Tesla already this year. In this account alone, $3,600 in profits alone just in that account. Never mind what's in the other account. So Tesla's been a great investment so far, but once again, I can't judge it too heavy because the jury's still out. We gotta let all this play out as time goes on. I think Tesla has such a massive, massive opportunity in front of that company that even being up 30% or whatever on the shares, like I'm not like popping champagne bottles or feel great or something like that. Like I believe these shares are going to be massively more valued in 5 to 10 years than they are today. So when I'm up 30%, it's kind of like a joke because I think this is stock that will be up hundreds of percent, maybe even 1,000% in the future. My biggest regret as far as Tesla is I didn't go a little heavier on the second time I got in. I probably should have went a little heavier in Tesla because I had so much conviction there. But on the same side, when I got back into Tesla, they still hadn't proved they were profitable yet because that quarter hadn't been announced. And number two, I was still kind of mad at Elon Musk for even attempting to fight the SEC. So I probably should have went a little heavier in it, but it is what it is. Needless to say, that's our best stock as a percent so far this year in 2018. As far as the worst stock, get ready, guys. This one's going to hurt your eyes. This one's going to hurt your eyes, and then we'll get into the one that I'm the most mad about that I didn't make a move in it, and that is US Steel. This is the worst stock by far and away we hold in our portfolios. So US Steel down nearly 28% on this stock. It has been an absolute disaster stock, okay? Cost basis is $28.74 on this one. Just a massive move down there. And literally, we just started buying that one probably less than 6 months ago, and it's just been like a straight crash in that stock price. It's one of only 2 stocks I hold that are down double-digit percents. I think the other one's Skyworks Solutions, and we're down around 11% on Skyworks Solutions. So the fact that this one has just done so awful is horrible. US Steel, as far as the company, the results have been amazing. They've reported amazing numbers all year, including their latest quarter, but Wall Street just has a negative perception of that company. They're just for people that own Micron stock, it's a very similar situation. Like Micron stock, like a lot of people on Wall Street cast it away as just a commodity stock, and if prices go lower, that stock's doomed and whatnot, and that's why Micron's fallen from like $64 back in May to like $36 now or $36 or whatever. Very similar situation to US Steel. People view it as a commodity company. It kind of is, and people just feel like, oh my gosh, if we had a recession, steel would be doomed, things like that. By the way, if we had a recession, guess what ends up happening a lot of times? Government actually ends up going and creating some massive spending projects, and probably a lot of those spending projects, especially if it was on infrastructure, would actually go toward steel and whatnot. So I don't think a recession would be the worst thing in the world. I don't think it would be the best thing ever. But US Steel, the numbers are amazing. The company's amazing. The 4P's at like 3. It's like insanely ridiculous. It's priced like it's the end of the world for them. If it's not the end of the world, it will bounce back strong and we'll probably make a good profit on it. But as of right now, it is just a devastated stock. I'll probably buy some in 2019 at some point in time, all right? Now, this next stock I'm going to share with you, it makes me really upset because this stock we were up over 50% on in this year, and I was thinking about taking profits. And once again, I'm not a huge fan of trading short term and a stock went up a ton in a 3 or 6 month span. But this one, it was up over 50% in like 6 months, and I was like, maybe I should just take profits. And I kind of looked at it and I was like, well, it's still kind of undervalued. I didn't take the profits, and that one would be Eli stock, okay? Callaway Golf. So Callaway, we're still up on the position, so it's not like it's gone down massively or something like that. Like we're up 7% on the position, but like I said, we were up over 50% on that position at one point in time. That was just a few months ago. We were up 50+%. It was well over $20 a share. I was thinking about taking profits. I just didn't quite do it because when I looked at the company and their Topgolf investment and whatnot, it's just so much opportunity still there. But the main reason that stock's moved down so much over the last few months, one, the market's weak. 2 is a lot of people don't like that they acquired Jack Wolfskin, which is their new acquisition. A lot of people feel like that was too much debt to take on. The way I look at it, it was a $476 million in debt acquisition. The way I look at it is if they ever got in a jam as far as a business goes, they could just sell off their Topgolf investment and basically pay all that debt off cash, because their Topgolf investment is worth a minimum of $400 million right now. It's probably going upward to $500 million, that investment just sitting on the balance sheet. So I love that company. I'll probably buy some more shares in 2019. I'm kind of happy it went down because I wanted to add a bigger position, and I want to add a bigger position, but at the same time, it was like I could have taken a 50+% profit in a 6 month span, and I didn't do it. And I thought serious about doing it, but I didn't do it. So anyways, I hope you guys enjoyed this. Hope you kind of learned from this as far as my best, my worst position, and the position that I'm kind of regretful. And the move I didn't make, which was I felt so strong about possibly shorting or buying put options in Netflix, and I just didn't do it. Amazon as well, I should have done it as that stock, but Netflix especially. Big mistake. Oh well, money that wasn't made. It It is what it is. Hope you guys enjoyed this day. Hit a thumbs up if you did. Thank you for watching and have a great day.
Learn how to manipulate data. And as a friend of mine says to a man with a hammer, everything looks like a nail.